Hello traders and welcome to FreeFX. Today is Sunday the 7th of June 2015. Today we're going to talk about the pound New Zealand dollar pair. This has been an impressive pair for the last few weeks, in fact for nearly 2 months, and I think it really deserves our attention. We're going to start with this chart, which is the pound Kiwi daily chart, and you'll see that historically from the early 2000s this pair has had a steep decline from this 3.5 down to 2.1516 as we are here, and a historic low here at 175. So we have actually regained some territory, but we are looking to make further gains. John Kicklighter of dailyfx.com has looked at this as a head and shoulder pattern with a neckline and an inverse head and shoulders. So this is the head and the shoulder, and breaking this neckline here. So from that point of view, the break has been made from 2.10 roughly, and we are now at 2.1649 at the close of business last Friday. This gives us a lot of run if indeed this pattern should come to fruition. It might actually continue its rise to make a retracement of further of previous highs going further into next week, which is the Royal Bank of New Zealand rate decision. So on the 10th of June, in 3 days, we have the decision, which from all accounts is either going to be a hold, and some actually bank for a rate cut. Now, the New Zealand dollar obviously has the highest interest rate of all the G8 currencies, so from that point of view, it is actually a high-yielding currency. But of course, this type of market, the Forex trading market, is not about where we are necessarily, but where we are going. The US dollar is the most hawkishly positioned currency, and the New Zealand dollar is actually really taking a beating because of its interest rate cuts and interest rate disappointment, if you like. So to give you an idea of where we are here, this pair is actually going to benefit from two things. One, the pound's slightly hawkish positioning. If we look at the pound dollar here, the cable, you'll see that historically we are in a sort of range. So you could say that this is some sort of symmetrical pattern, okay? So I'm going to make this quite clear, but I don't want to spend too much time on this, so I'll make it very brief. Let's say if we had a shape of this kind to highlight this, and then a similar shape here, you'll see that these two areas are similar in size and duration, okay? And then we have this third area which is above them. So we have symmetrical patterns here. We have an A, a B, and a return to A. And to make it even more obvious, we could say that the pound is, yes, hawkish, but there is really an agreement as to when the rate boost is going to come. So we're going to just make this a very simple, okay, line there and a line here. So let's say that this is our range, okay, from about 172 to 146, but don't take it too literally, it's just an approximate measure. So this is an impressive range, of course. It's 2,600 points. It's not exactly a small range. Now we have actually covered it from about a year ago, in fact, the end of May of last year. We've come down to here in March, end of March, April. So we covered this whole range again and we bounced off it. Now, of course, there aren't any orders just sitting around here from 1993 that has caused this, but there must be some reason why we bounced. Could this be just the expectation of the pound possibly moving forward for a rate rise, or other things? But the point is that visually one cannot but help seeing this pattern repeating itself: rise, fall, and then rise, fall. However, the shape of it is obviously going to be different because we never repeat things the same. However, we have a sense of direction anyway, so we could climb up to 170 or 72 of last year, but possibly not. This could be said to be maybe a head and shoulders spanning this huge time, which I really doubt, but anyway, we could say that this might be possible. And then if the pound's expectations for a rate rise should disappoint again, this might break down and maybe head down to 140, or these historic lows here at 136. We don't know that. But the point is that the correlation between the pound Kiwi and the pound dollar is dubious. If you look at the shape here between these two, you see they're quite different, okay? But just to make it obvious, I'm going to overlay the two so you can see actually what is going on. And let's do that by adding it into the chart, and this should be quite obvious in that way. And then you'll be able to appreciate what we're actually trying to do. Now, this is daily chart versus daily chart. So the blue line is now the pound dollar. Now you can see that the pound dollar has had a lot of movement. The Kiwi dollar comparatively hasn't. And when the pound dollar has gone up here in July all the way up to June of 2003 to 2014 with interest rate expectations, well, the pound Kiwi hasn't risen in the same way, and this massive plummeting hasn't actually matched this movement, which is actually slowly to the upside. Okay. Now, if we actually zoom into more recent price action, we'll see that there has been some sort of correlation to the upside, okay? But the pound dollar has actually steadied and come down from 157 rather. It's the left-hand side that we need to watch for this price. 157 to about 152. It's lost 500 pips in the same time. The pound Kiwi has gained from 2.8 to 2.16 800 pips. So the correlation between these two pairs is not particularly helpful from this technical point of view, although the pound dollar expectation of running to the upside should the pound beat the US dollar to a rate rise is tremendous. Okay, it really is an impressive potential, but we're looking at probabilities, and the probability of that at the moment is foggy. We need to therefore potentially look at the pound Kiwi in relation to another pair, which is the Kiwi dollar. So we're going to remove that, and we're going to actually make this full size. I'm going to overlay the Kiwi dollar to see what we can actually gather. Now, the Kiwi dollar is an interesting pair if we compare it to the pound Kiwi, and let's see why. Okay, so here's price for our two pairs. Now we can see from 2008 we have this movement of the Kiwi dollar rising and then reaching this apex, okay, at 0.88. We're now at 0.88. Let me see if I can make this smaller again, and you can see that better. Okay, so We've arrived again at 0.88, but now we come down to 0.70, just over. In this period here, what did the pound Kiwi do? Well, being on the opposite side of the equation, you might think, well, the Kiwi dollar has depreciated for 1,800 pips. But what happened here? Has the same occurred inversely? You'd expect possibly an inverse correlation, and with such a drop, the pound should have risen enormously. Well, it hasn't really, because from 1.95 to 2.15, that's, well, more or less 1,000 pips. Well, this is 1,800 pips. Okay. Now, what's also interesting is that whilst that inverse correlation was taking shape from 2009 to 2011, you can see the two pairs being almost perfectly inverse to one another, or rather the pound Kiwi being a synthetic pair between the pound dollar and the Kiwi dollar. However, this relationship has become a little bit murkier. However, if we zoomed into more recent price history, and we're just going to remove these two, okay, now we can start seeing that we have some sort of movement. So if we unlocked these two like so, okay. Now, so we can see that we have, let's make it perhaps a 4-hour chart where we are with this. Okay, so looking at from middle of May to where we are almost middle of June, the Kiwi dollar has been dropping and the pound Kiwi has been rising. So there is an inverse correlation that is really taking shape again. So from this more recent price history, then zooming into it, it is a little bit more obvious. And if we measured it, it would probably be very similar in terms of size. Okay, so just to summarize, the pound Kiwi is looking very good to the upside. And with the non-farm payrolls on Friday, we did see a very sharp rise in this and a very steep drop in the Kiwi dollar. So that has boosted the pair, which was struggling around 214, 215 here. And it pushed it up past 15 and indeed past 16. Okay, so this level is not particularly significant in that it's not been challenged in recent history, not for the past 2 years. So really we are free to run further to the upside. I will keep an eye on the pound Kiwi, which is also a very volatile pair, because if we gave it a day chart ATR, and let me do that for you, ATR, here we are. Okay. Now the ATR for the pound Kiwi has reached 300 plus. Okay, we're looking at 315 pips here on the 22nd of May. Now it's sort of dropped, but we're still at 250 roughly. So with that sort of daily average volatility, we do have some great potential even for day traders, for intraday traders, where we want to capture a 1-day move or a 4-hour or an 8-hour move. So keep an eye on this pair, absolutely, and look out for the interest rate decision from the RBNZ next week, which should be a very interesting one. And later on the 17th, we have obviously the later on in the month we have the Fed's rate decision. Best of luck and happy trading.